8%. EBITDA is down about 85% year on year. So something has really gone wrong with Nazara Tech. The profits, remember, are aided by higher other income. So the street definitely doesn't like the fact that there is contracting EBITDA for Nazara Tech. The other stock I'm looking at is Ashok Leyland this morning. As you heard, the management commentary was very positive. Citi has a buy. They've raised their target price to 245. Jefferies has a hold, but they have raised their target price to 205. So brokerages are bullish on Ashok Leyland, and management was also quite sanguine. And the other stock I'm looking at is Glenmark Pharma. They are targeting a double-digit profit growth in FY25, and they are targeting an EBITDA margin at 19%. So Glenmark Pharma also looking pretty good. But let's get back to the overall market. This is good. The fact that after a big rally last week, the market is holding on to 23,000, led largely by the Bank Nifty, which is up 140 points. So over to you guys, looking like a decent start.
Well, that's right, Sonia. Bosch is the big one, up close to around 4.5% as we speak. And, from the FNO pack itself, you have Hindustan Copper. That one, well, valuation-wise, it's out of back, trading at more than 100 times. So that's on a trailing basis. The margins are around 40%. The street likes that. HCC, that came out with its set of numbers. That's coming for a bit of a pullback, down close to around 3%. One of the top volume movers on the downside in today's trading session. So HCC down 4%. IQ Lighting. Those numbers are very, very disappointing. This is one of the recent IPOs. The critical point out there was the EBITDA margins contracted by close to around 400 basis points. Came in at around 18%. That compares with around 22%. And from the peak, I think the stock is nearly half. Kochi Shipyard is flying away, though. They reported an EBITDA of around 280 crores. That compared with an EBITDA loss. So the street likes that. You have Moscow Dock as well. That's up close to around 6%. So that one is well gaining big time. Forgings, I'm not sure what's the piece of news out here, but that one is up close to around 10%. The street has been talking about this valuation gap with Bharat Forge, but that one today is up close to around 12%. So that's one of the big gainers today. Johnson Hitachi, well, for the second day running, that stock is up close to around 10% as we speak. So big up move is what we're seeing. And on the flip side, your Best Agro, that stock is down close to around 6%. It's nearly half of what it was just around 12 months or so ago. Prashant, what else?
So it's once again a repeat of what we saw broadly. I mean, if you want to see where volumes are, where the price is moving, it's PSUs. Without a doubt, it's PSUs. The CPSE index was up 6% last week, beg your pardon, with a holiday thrown in, right? So in 4 days, 6% gain on that index, and it's that space again. So look at this. Cochin Shipyard, biggest volume-led gainer, 7%. There's RVNL, which is up 6%. Mazgaon Dock is up 5%. Bharat Dynamics is up, BDL is up 4%. IREDA is up 4%. These have got some of the largest volumes. That is Garden Reach, another shipbuilder, is up 3%. RCF is up about 7% or so. There is, that kind of concludes the list of the biggest volume-led gainers as far as what's coming up. And of course, some of the earnings reactions you guys talked about, Torrent Pharma, and there is Affle, which reported numbers. Inox Wind has got about 6% gains. We'll be speaking with Suzlon a little later on the back of their numbers and outlook going forward. On the downside, Adani Group stocks are up about 20-25% in short order going into these over the last couple of weeks. Actually, Enterprises is down 2%. It's got large volumes on it. There is Karnataka Bank, which is down about 3%. EIH Hotels. Zaggle is coming up with about a 2.5% cut as well. So it's quieter on the downside. Bulk of what is happening on the upside with decent sized volumes.
Just one or two more stocks. Nazara Tech, there's some news flow that the founder, Mithir Infotech, has sold almost 6.5% stake via the block deal. We had just flashed that a while back. The founder's stake sale is to the existing investor, Plutus. So, that's an additional reason. Of course, the numbers are also weak for Nazara Tech. The revenues have fallen, margins are under pressure, and now the founder has sold some stakes. So that's one stock I'm looking at. The other one on the upside is Exide. There are multiple brokerages that have raised their target price on Exide. Morgan Stanley has raised it to 567. Nomura has raised it to 589. So that's another stock that I'm looking at. And then you have the entire defense space, which was a big mover last week. Once again, all of these defense stocks, whether it's, you have something like a BEL fresh high there, Mazgaon Dock fresh high, Astra Micro fresh high, Garden Reach Shipbuilders fresh high. So this is one space that has been doing really well. But we, of course, have Conrad Saldana sitting here with us. Conrad, thank you for your patience. This is a market that has been up and away, right? And large money coming in from domestic investors. Whatever be the outcome of the elections, do you reckon that barring the fact that If there is a large upset, of course, things could turn differently. But do you reckon that this is an uptrending market that one should still participate in?
Tough call, Sonia. I think for us, I would say nearer term valuations might be the struggle. Fundamentals look good, they're executing, but it's also patchy, right? So I'll just highlight that. Your manufacturing, infrastructure, even defense-related names, you're seeing the numbers come through, right? But on the flip side, I would say for consumption broadly, it's been a soft patch, right? IT, after listening to NVIDIA, that's a massive strategic shift, that's inflection that's happening at almost once in a decade. You see that, so that needs to adjust itself. So there are pockets of it, and when I look at the bank's numbers are somewhat mixed. So it's not all smooth sailing when I look at it fundamentally. So everything gapping up and moving up. I think a rising tide is definitely in play here. So I would just be a little bit more discriminatory in terms of what I buy and be very selective on companies that are executing, they're growing in terms of their volumes, right? Yeah. Price, hopefully not too much of a negative, but that's where I would be deploying capital. But just moving away from a broader story.
All right, Conrad, good to meet you first of all in person, and thanks a lot for coming down to our studio. Let's get a couple of names out of the way. The last time you were down, we spoke about, I think, Jyoti CNC, Ask Auto. We in fact interviewed the management a few days ago, and a few other notable names as well that y'all got into. CMS, I think, was the other one. Give us a list of a couple of stocks that y'all have recently got into, which has a good runway.
I think for the names you mentioned, we're still very positive on them. I think there's a long runway. It's much more structural. If you talk about the EMS space, we have owned Keynes for a long period of time. We probably had much more exposure broadly, but I think the two folks who are executing, one is Dixon's, right? They're kind of the gold standard of the listed space in terms of just getting those volumes out there. If I can go back 15, 20 years, whether it was Nokia, Ericsson, they've really come along. It doesn't matter which the client is, right? They've really adjusted themselves. Keynes is the other one that I think is executing, going from more PCB, box build, OSAT, ODM manufacturing. So I feel good about that business structurally longer term. The other, ASK still, the numbers, post the IPO, there was a soft patch in terms of the quarter. Now you're seeing them deliver coming through, and so whether it's a 38% growth in revenues is a very strong number from the team there, Mr. Rathi in particular. If I move on to potentially Venus Pipes. Again,
that's something that you'll have liked for a long time.
For a little while, and like I mentioned the last time, Nigel, we don't turn over our portfolio that much, and when you're buying the smaller names, you're generally believing in the compounding of this business over the long period of time. But Venus Pipes would be one that I, again, see whether it's seamless, it's welded pipes, they're moving more into fittings. Again, volume growth of 40%.
Indeed.
For EMS companies like Dixon and Keynes, Conrad, what are valuations at now? And for people looking to get fresh exposure, does it make sense? I mean, if you already own it, great, you're making money.
Yeah, Prashant, your point is fair. It's a tough one. Dixon's, you had those opportunities where the sell-off, right, and you get a 15, 20% correction. Now, putting new money, if you have a longer-term view of 2 to 3 years, they're going to compound, and the order flow coming through, they start to do more in terms of CPU, GPUs coming out. It's going to really inflect.
No, we had the management with us a few weeks ago. They said they did about 18,000 crores in revenues in 24, and they told us that for 25, then that number would be north of 32,000 crores. So that's that's a big inflection.
Big inflection already.
But margins, of course, are for this kind of a business are small. But what would you be willing to pay for? And would you look at cheaper names, maybe Amber? I don't know. I mean, would you go down that road?
Prashant, I would put it that in terms of execution, having gone through this and looked at the U.S. names, Taiwanese names, we also invest in. Dixon's has delivered. Now, the business model, to your point, is that margins are lower, but their turns are as good as anybody. And so you look at return on capital is really solid. Keynes has higher margins than them. They're about, EBITDA margins are probably in that 14.5% to 15% range, and still good ROC. So that's another one. I'd say, depending on growth. Now, I do believe these businesses can grow at 30% or so. I'm not going to say 50, 70% is sustainable when you look at a 5-year ramp. So if you're paying, on a PE multiple in that range, probably makes more sense. You get those opportunities. Dixon's has never been a cheap stock.
Yeah.
Yeah.
You get disruption from one customer to the next.
Yeah.
The market gets myopic about a quarterly number, and that's your opportunity to buy it.
And look at the way the stock has moved, right? 150% in the last 12 months. Conrad, the last time we spoke to you, you said that if you get an opportunity, you will buy into private sector banks. But you were a bit skeptical about the way the HDFC Bank had done communication with their investors, etc. All of this happened, a few months ago. But at this point in time, there's a lot of buying seen by domestic investors in HDFC Bank. What do you do now?
I think if you have a longer-term view, HDFC Bank is still a franchise. As I mentioned the last time, and you rightly said that, Sonia, is that one was communications. The other thing is, I think for all of us, we have to be practical. These are two big businesses coming together, right? The piece of the book that needs to be recycled, figuring out deposits and restarting the engine. So I think and we have to keep an eye on management changes, right? And any exits there, that matters. This is a people business, right? The business, I think, is solid longer term. I would say, and its valuations, when you think of it, this was a business that used to trade at 4 times book. The other one was Kotak, right, was on the private sector, was at massive premiums. And now they're trading at the low end, and the gap between PSU banks has shrunk massively, right?
So what does your order of preference look like in the banking space now?
So, I would say we're still more exposed to the private sector. Okay. The name that we're very excited longer term about is Chola. Again, fantastic collections. It's about collections that matter. I'm a little more cautious when I think of the low end of the spectrum in India. When I think of lower incomes, people are getting marginalized and squeezed because of inflation. So you're starting to see that manifest itself. Microfinance, I think you're going to see those uptick. I'm seeing that right now in Indonesia. And it seems like a very similar playbook that's evolving here.
Sorry, uptick in?
In non-performing loans, ability to pay, people getting squeezed. So I think that's something I would just be a little bit more cautious about. I would say consumption at the low end, does that migrate to the mid-end consumer if it persists for a long period of time? It cannot be that K curve that we talk about. So just to balance out the maybe optimism that maybe there are green shoots we're talking about when you speak to the FMCG companies, right? Dabur, Leavers are talking about something. We'll have to see that. Is that a continuation of that? Is that just prior to the election? Is that being helped? Urban migration. So there are a lot of nice stories around that. We'll have to just see a continuation of that, of those green shoots.
Well, that's right. Chola, as we discussed last time as well, may not be cheap, but plenty of room to grow and compound from here on. Well, Conrad, we appreciate you coming down to our studio, discussing the markets as well as all those stocks. Wishing you well, and we look forward to chat up with you post the election.
Thanks, Prashant. Cheers.
Well, for the time being, let's shift focus to Hindalco. It reported a good set of numbers. The total India as well as the copper business put it together. Well, it beat our estimates by a goodish margin. To discuss this and more, we have Mr. Satish Pai, the MD of Hindalco, who joins us. Well, Mr. Pai, thanks a lot for joining in. Aluminium prices, well, they have seen a big surge. But what is sustainable with regard to a per-ton basis? What are you factoring in?
In the last couple of weeks, the aluminium prices have spiked up, but they've been fairly volatile. There have been sort of $100 swings each way, currently running at $25.50. I think that, we are sort of working with the fact that the numbers are going to be a little bit more stable around 2,400 rather than the current 2,550 or 2,600.
So there has been a steady improvement in the aluminum EBITDA per ton of the upstream business. How much higher can it move from these levels?
Absolutely. I think our input cost, especially coal cost, there's enough coal available. So I think our cost of production in Q1 is probably going to be a couple of percentage points even lower than Q4. So I think that the EBITDA per ton in Q1 will be certainly higher than the Q4 $967 per ton.
Okay, do you want to give us a range on the aluminum EBITDA per ton and what you expect going forward?
Well, I'll just tell you that it's going to be higher.
So we'll take that then. Q1 EBITDA per ton will be better than Q4. But Mr. Pai, the other surprise was the copper segment. Delivered blockbuster numbers. EBITDA coming at more than 750 crores. But what is a sustainable number we should be working with on a quarterly basis for the copper business?
So I think Q4 was a little bit exceptional for copper in many ways. The demand for copper rod was very high. If you look at it, we had a record sales of 135 KT of copper. So combined with high LME, that gives us a better margin. I think Q4 was very exceptional. But that being said, the Indian demand for copper is very high. So we think going forward, the 600 crore type of EBITDA range should become the new normal.
Okay, so 600 is more realistic and sustainable for the copper business. Got that. The Novelis EBITDA per ton, well, that's improved over the past few quarters. Could you give us a range on that front?
Unfortunately, due to the federal securities laws and the quiet period we are in for the IPO listing, I cannot be talking anything about Novelis on this call. I'm sorry about that.
All right, Mr. Pai, but at least give us a timeline on the Novelis IPO or a rough valuation. Now, some reports are suggesting 50 and 60 and $18 billion odd. Give us some kind of a number.
I cannot talk anything about the IPO listing because of the restrictions.
Understood. Can you guide us for what the capex could be for FY25?
So we spent 4,200 crores last year. Our current plan for this year is 6,000 crores. A large part of that will be the completion of the FRP project that's going on. But a number of new projects are starting, which is the battery foil, the copper recycling project. We are going to be looking at the alumina refinery in Odisha that will get off the ground this year. So I think for the next couple of years, you're going to see a 6,000 to 7,000 crore level capex going forward.
Okay, then what's the outlook on the debt levels? You know, steadily it's been coming down. If I look at it in the last few quarters, steadily you've been reducing the net debt levels as well. Tell us more.
So look, the point is you have to separate the two balance sheets now. And if you look at the India balance sheet, we are net debt negative. We have about 11,000 crores of treasury and we have only about 7,200 crores of long-term loans. So and we will be generating cash. So I think that spending 6,000-7,000 crores per year on capex, just from internal accruals, is completely feasible.
Mr. Pai, could you give us a debt guidance though? You know, what does it come down to then?
Depends on how much the results of this year look like. If the LME is very good, we may even prepay further long-term loans. But currently our plan is that the long-term debt, by the way, there's nothing due for the next 2 years. It only comes in FY27. So we don't have plans to prepay debt anymore, but it will depend on how the cash generation goes.
So your business is dependent on TCRC, while Hindustan Copper is a play on LME copper prices. Since Hindustan Copper prices have zoomed, are you still interested at these valuations?
See, ultimately, any opportunity that comes will be evaluated, and if it makes sense, we'll take a look at it.
All right, Mr. Pai, thanks a lot for joining in and giving us all those details. So just to recap things, aluminum prices should stabilize at around $2,400 per ton. The aluminum EBITDA per ton will be better in the coming quarter in comparison to the past quarter. And copper, on a realistic basis or a steady state basis, should hold at around 600 crores on a quarterly basis. That compares with around 770 crores in the past quarter. For the time being, we're slipping a short break. Come back. We'll have this interesting chat with the CFO of Suzlon. Stay with us.
Welcome back. This is Corporate Radar. You know, the market is doing great. It's not so much the headline index which is holding on to its gains from last week. It's really the broader market participation that is astounding. I mean, the mid-cap index is now up almost 0.8%. The market breadth is positive and plenty of stocks are hitting all-time highs. So there's so much participation beneath the surface. But let's focus on Suzlon Energy. It reported a good set of Q4 numbers. The revenues went up 30%, margins expanded, but the net profit slipped 8.6% year on year. We have Himanshu Modi, who's the CFO of the Suzlon Group, joining us now. Himanshu, hi, good morning, and thank you for speaking to CNBC TV18. You know, the execution in the whole fiscal, right, in FY24 has been a bit underwhelming, despite the kind of very strong order book position that you're sitting at. There was an expectation of 800 megawatts of execution, but that did not play out. What led to this? And now that we are in election season as well, what do you see as the way forward over the next, in the first half of FY25?
So, morning to you and your viewers. Firstly, let me just summarize our annual results for the viewers. So, we did 664 megawatts of deliveries in FY23. As against that, we've done about 710 deliveries, megawatts of deliveries in FY24, registering about a 7% growth. From a commissioning perspective, which is what the actual turbine is getting connected to the grid, we did 495 megawatts in FY23 as compared to 882 megawatts in FY24, which is a 78% growth from a commissioning perspective. Revenue, of course, registered a 9% growth to 6,497 crores in FY24. Now, operating parameters also have significantly improved for the company. For the full year, we registered a EBITDA growth of about 24% to about 1,029 crores, and a net profit PAT before exceptional items, which is the key word.
Mr. Modi, yeah, we actually know all of that data because it's already there in public domain. We want to just understand the way forward. What is the kind of execution that you're looking at? You know, what is the realistic target that you can have in terms of tendering of orders, etc. So if you can just help us with those numbers on what the way forward will look like.
No, I just wanted to correct because, you started with a drop. That is incorrect because our net profit before exceptional items is what you need to look at from a apple-to-apple basis. So when you register or when you're reporting that a net profit is dropped, I'm sorry, unfortunately, that is incorrect, even on a quarter-on-quarter basis. So the numbers are there on a Q4 to Q4 basis. Our net profit was 68 crores last year, which has grown to 281 crores this year, registering almost a 410% growth. So those numbers, as you said, are there for you to see. Now, going forward, of course, we never started a year with a strong order book. We have about 3.3 gigawatts in order book that we're starting the year with. And as I mentioned, we have had a good execution growth in FY24. Whilst I can't give you an exact number on what we'll do in Q1, but suffice it to say that from an execution perspective, we are already from an industry, Suzlon perspective, and also we start the year with a fairly healthy order book and, of course, a healthy balance sheet.
All right, Mr. Modi, hi, good morning, and thanks a lot for clarifying on that front. So I'm reading from a brokerage note. They're expecting you to execute close to around 1.5 gigawatt in FY25 and then 2.5 gigawatt. So your order book is very, very good. But some part of the street is a little bit disappointed on the execution front. So tell us, does 1.5 gigawatt sound feasible for the coming fiscal? And also you gain market share in the past year. If the way sell-side analysts do calculate it as well. Do you expect to further increase your market share, I think, from around this 27-28% on?
So again, the country did about 3.3 gigawatts this year in commissioning. Now, our expectation is that, the country will be around 5 gigawatts in FY25. Now, whether we are able to maintain the market share or increase the market share is individual analysis. So whilst I can't comment on the brokerage report they're talking about, but if the country does 5 gigawatts, which is what our estimates are, and we're able to maintain a market share, even if not increase it, then, I leave the math to the analysts and the viewers.
So the math is there, 1.5 gigawatt then, presuming that 5 gigawatt is done in this year. Are we getting that correct, right?
That's our estimate that the country should do 5 gigawatts this year. Yes.
And just to clarify on this order book that you're holding of around 3.3 gigawatt, it includes the recently won order, right?
That's right. So a lot of these orders, if you see, the street sometimes gets impatient. A lot of these order books have been ramped up by us in the last 4 to 5 months, right from January until May now. So, these are long-dated projects. People have now started, our customers have started planning almost 2 years in advance for the project execution schedules. And a lot of these orders, as I said, have been secured by us in the last 5 months. So we have those capabilities. It will take the time that it takes. We are very focused and on the patient and timely profitable execution of all of these projects.
Yeah. Himanshu, hi, morning. Prashant here. Now, impatience is the other name for the street. I think there's no doubt about it. But yeah, I mean, that's to be expected, right? And you're very well aware. So if you do 5 gigawatts of, so not you, but the total installation in the country is 5 gigawatts in FY25. I was listening to the call, and in FY26, Mr. Chalsani said that number could be between 7 and 8. I mean, at least that's the expectation. And FY27, it could be between 9 and 10. So would it be fair to kind of model taking a 30% share for Suzlon? That's the trajectory we're looking at?
So yeah, whilst those numbers are broadly correct in terms of our internal estimates and what Mr. Chalsani had said earlier in an interview with you guys, we need to also step back and see that the policymakers are very clear that the wind industry or installations by 2030 need to get to close to about 100 gigawatts. We are ending this financial year FY24 with about 45 to 46 gigawatts as an industry. So, steadily increase over the next 6 years. I think the industry is all geared up to meet that target of 100 gigawatts by 2030.
And another thing which I think bears watching is how much the center starts to get involved, right, to sort out some of these land issues, because I think that is the big challenge in terms of getting fast-tracking some of this stuff, some of the numbers we're talking about. On margins, Himanshu, if you can guide us, because you've got a situation where commodity prices are hardening, and it's not just what's already happened, but forecasts also are suggesting that there's generally an upward bias for some commodities more than others. But will that be a bit of a headwind? So if you can guide us for FY25.
So again, whilst we don't provide any specific guidance, but I can generally talk about splitting our 2 or 3 key business segments. The maintenance or the O&M, as we call it, there I think we are sustaining an operating margin or EBITDA margin of about close to 40%. So I don't see any reason why we should not be able to continue to do so for FY25. So long as our manufacturing business is concerned, we've always historically registered mid-teens in terms of contribution of gross margin. Of course, this year we've ended with about 19.5% gross margin on the manufacturing business. Now, whether hardening of some of these commodity prices, we're able to maintain the margins, or there may be some slight impact on those margins, is something time will tell. But I think our margin profiling for the manufacturing business should continue in the mid to late teens vicinity for FY24.
So can you give us some more numbers, Himanshu, on the revenues and on the EBITDA? What are you targeting for the full year? On an average, you're sitting at about 2,200 crores per quarter in terms of top line. So what is a fair estimate of what FY25 could look like in terms of revenues?
So again, splitting our business segments, the O&M revenue would have secular growth, which is linked to inflation going forward, at least in FY25. So far as the manufacturing business is concerned, it depends on the volumes we are able to deliver. Of course, our average selling price per megawatt, we maintained a little shy of 6 crores per megawatt. So depending on how much we are able to deliver in FY25 would determine the revenue that we do in the manufacturing business for FY25.
So O&M as a percentage of the top line is around 25 to 30%. Is there expectation that that would improve further? And in terms of O&M margins as well, what are we looking at in FY25?
So O&M, you're right, for FY24 is about 25 to 30% of the overall pie. But should the overall pie increase, O&M pie, the pie would reduce for O&M because the manufacturing does increase, that 25 to 30% will reduce. And as I said earlier, from an operating margin perspective for the O&M business, we should be able to maintain about 40% operating profits.
Got it. Mr. Modi, what about, competitive intensity on ground? Are you seeing more number of players, come in? Are the Chinese players like Envision as well, hurting the market? Tell us about the competitive intensity in the space.
So, certainly there are certain Chinese competitors that are quite active in the Indian marketplace. But, the demand is such that there is room for all of us to play. I mean, as you can see, as you rightly said earlier on in the call, from 23 to 24, we've increased our market share from 22% last year to 27% this year. And, this is a complicated piece of engineering. I mean, it's unlike solar, which is just panels, largely commodity. This is a complicated piece of capital goods. So Suzlon, at least has the competitive edge of the only turbine that is designed specifically for Indian conditions, whereas some of our other competitors that are coming from the Western or Eastern markets, as the case may be, necessarily don't have that competitive edge. So whilst there's certainly room for all, to flourish and play in the marketplace, but I think from a Suzlon product strategy perspective, we have our USP clearly cut out.
Okay. So, you've given your execution targets, right? And you've told us what your current order book. This has been your largest ever order book at 3.3 gigawatts. I just want to understand what's the order visibility over and above this current order book. What kind of visibility do you have over the next 12 to 18 months?
So it's a fairly active, negotiations on quite a large order book with different customers that is currently going on. Of course, I won't be able to provide any specific numbers. The street will hear about those orders, and when we announce those, we have a fairly clear policy on when we get back to the street on our order announcement. But suffice it to say that negotiations our team is doing with quite a few customers on quite a healthy order going forward.
All right. Himanshu, we'll leave it there. You find yourself in a pretty good spot, and there's a fair bit of tailwind, and hopefully, the bidding out process, and then finally the ordering, etc., will continue at the pace at which it has. So, thanks very much for joining us with that perspective for 25 and beyond as well. So that's Suzlon with some perspective. DLF is the next company that we are focused on, and we have Mr. Ashok Kumar Tyagi, Managing Director at DLF, joining in. I mean, FY24, of course, was fantastic. The pre-sales guidance was surpassed, big time. And now for FY25, the guidance is, of course, 17,000 crores. Mr. Tyagi, good morning, sir. Thanks very much for your time. As always, Prashant this side. Could you give us a sort of on-the-ground assessment right now, as we speak to you right now? Are things as good? I mean, because things have been pretty good for a while. How is demand holding up? Sort of a project uptake? Is it going as fast as it has over the last 12 months or so? What about pricing? Just an overall sense before we go into details.
Okay. So frankly, Prashant, now it's been almost, I think, in excess of 2.5 years now. And I think the demand's been holding up. In fact, it's strengthening almost quarter on quarter, I'd say. We did the second phase of Privana launch in end April, early May, and I think that also sold out in a period of 3 to 4 days. So the demand's holding up, the pricing trends are holding up, our execution machinery is in full shape, and I think not only the residential, even the commercial side of the equation, which is both the office leasing and the retail leasing, are both strengthening almost on a quarter by quarter basis. So overall, this is relatively, one of, I think, in the midst of a virtuous cycle.
Hey, Mr. Tyagi, good morning. I mean, this has come after a long dry spell that the industry had, right? So yes. I think it's your time to shine now. But tell us this Lux 5, how much is it likely to contribute going forward? I mean, Camellias too. I just want to understand, what is it's of course premium property, right? The pricing is expected to be 50 crores upwards. So what is the kind of contribution that you expect here? And how much will it add to your, revenue target over the next 1 to 2 years?
Okay, so good morning, Sonia. I mean, I'd like to clarify that Lux 5, Camellias 2, वगैरह, these are all broker-assigned working titles. We haven't titled the product yet. We haven't, it'll be properly brought to the market post-RERA and everything. So I think it's still possibly a quarter away. Having said that, yes, you are right that we are proposing and planning to launch another super luxury product on the Golf Course Road now that Camellias is almost sold out completely. I mean, I wouldn't hazard a guess on the ticket size, but in our pipeline sheet in the analyst presentation, we have right now ascribed a potential launch value of 20,000 crores to this project, which in all fairness could be exceeded given how the pricing trends for that segment have been. In the first year, given that we'll be launching only towards maybe, August, September, we have right now been conservative, and of the 17,000 pipeline, we have only ascribed about 3,500 crores for Lux 5. And the balance 13,000 crores plus is actually being based on all other launches, excluding Lux 5.
So your launch pipeline is for FY25 is about 11.6 million square feet, right? Is that correct?
Yes, yes, it is, ma'am. Yes.
Okay, and how much of that will be in the first half of the year? What is the kind of execution that you're looking at in H1?
So, Sonia, Q1, of course, is not going to see any significant launches, except Privana Phase 2, which has already happened in April end, which was about 6,000 crores. I think 5,700 crores. I think in Q2, we should have the Goa launch, hopefully, if all goes well, which is a super luxury villa launch in Goa. And I think maybe towards the last phase of Q2 or early Q3 is when you should see Lux 5. Mumbai should happen again late Q3 stroke early Q4. We are targeting late Q3 as of now. And the next phase of Privana should hopefully happen by Q4. In addition to that, there will be smaller launches of commercials and some launches in Tri-City Chandigarh, which will keep on happening through the year.
All right. Hi, good morning, Mr. Tyagi. Always good speaking to you. I can feel the confidence in your voice. I think a sweet spot for real estate companies, and you're fitting in perfectly well. What's the probability you go ahead and give the street a pleasant surprise? Last year, you had earlier guided for, I think, around 13,000 crores of pre-sales. You ended up with a 10% beat. This time, you're talking about 17,000 crores. Are you likely to overshoot that as well? That's point number one. Point number two is on the rental income. You've done around 4,300 crores. What's the outlook for this year?
Okay. So, Nigel, on the sales guidance, as I mentioned just now to Sonia also, of the 17,000 crores, I think we have been fairly conservative on our guidance towards Lux 5 because that will be a super luxury project. And I think there's a fair chance that we may beat that guidance. By how much, I guess we'll have a more accurate ear to the ground by December, because most other projects that we are launching, we are pretty much banking on them selling out completely during the year, So I think hopefully by October, November, we'll know broadly whether the 17,000 is being exceeded, and if so, what's a reasonable degree of exceeding it by. On the offices piece, as you mentioned, while our total rental income last year was about 4,300 odd crores, our exit run rate as of March 24 is now running at about 48 to 4,900 crores for the fiscal 24-25. And we expect that by March 25, our exit run rate should be almost touching 6,000, because about 3 odd million square feet of our developments should be completing in Chennai and getting into rent commencement mode this year. And the downtown in Gurgaon, which last year only had a few months of rentals, this year will be a full year rental. So we are expecting about a run rate of about 5,000 crores, 4,900 crores exceeding March 24, and going to about 59 to 6,000 crores by March 25.
Interesting. And just to sort of, you said that in the 17,000 pre-sales guidance, this luxury project is you're accounting only 3,000 crores, right? Out of the 20.
Yes, I think 3,500 if I'm not mistaken. Yeah.
Okay, and that number could be bigger. I was speaking recently with somebody in Delhi, and I was talking about the club facilities, etc. in Camellia, saying they're absolutely world class. And do you offer those memberships to outside sort of residents as well?
No, we don't, but we are more than happy to have a visiting media delegation go through it.
No, not for me. I mean, this gentleman I was talking to was saying that there is.
Maybe. No.
So it is for the
No,
residents,
Prashant.
right?
Prashant, all of these club facilities are for the residents of that specific condo. In that sense. So obviously, teams keep on doing events, etc., where obviously outsiders get invited. But on a repetitive basis, the usage is restricted to the. That's been the case with all of our clubs, Aralias, Magnolias, now Camellias, and hopefully going forward as well. But agli baar, when you come to Delhi, I think you must let me know pehle, and we'll take you through the club.
Prashant, it's an upgrade coming there, Prashant. Going to keep an eye on this.
Is this a big part of the entire package, Mr. Tyagi? When you launch these super luxury projects at these, these price points, which arguably there is demand for, but it just seems, obviously really top end, right? So is this a large part of the offering in terms of how you're able to market it?
So in all fairness, yes, I think clearly the club and all the facilities that come with it are clearly, I think a major USP of developments like this, and on the golf course road, be it Aralias, Magnolias and Camellias across the span of about 2 decades. Each of those projects when they were launched were definitely, way beyond what the market was offering, even in a comparable price segment at that time. And we hopefully, in fact, if you may or may not recall, Prashant, there was a time around 2018-19 when the Camellia sales had stalled.
Yes.
And,
we remember we'd spoken and we used to talk about how many units
we had spoken at length, in that.
Yeah.
We had spoken at length. There was a quarter, I still recall a horror quarter where about 25 million cancelled, I think 2018 came us. But then, in all fairness, I think A, the market sentiment, and B, once the club commissioned a couple of sample apartments in the Camellias commission, and then the sales that have begun subsequent to that, I think have been extremely strong sales, in that sense. And now I think we are left with, I think, less than 15 apartments.
Okay, Mr. Tyagi, I have to ask you about the Mumbai market, right? Because anyone and everyone who is someone is entering the Mumbai market, and DLF is not too far behind. You've invested 400 crores for that 51% stake in that SPV in an Andheri project. But tell us a little bit about what the overall plans are, not just for Mumbai, for Goa as well. What kind of potential do you see here? Okay. What could the growth look like for you?
So first I'll tell you Mumbai. Mumbai obviously is the country's biggest real estate market. I don't think that there's any doubt on that. We ourselves did not have, we had one great property which we, as you know, we sold to Lodha about 10 years back, and I think they've done a great job of developing that property. We had another property, another joint venture that we had, which unfortunately ran into rough weather and is currently involved in litigation. So we were sort of, we were very gingerly about re-entering Mumbai. This is a project which hopefully over time can have about a 5 million square feet development potential in Andheri West. Right now, I think we have done our partners have done the slum rehab, etc., to get the first 1 million odd square feet of saleable area cleared. I think that's what we propose to launch hopefully by Q3 or early Q4 this year. So first of all, let's see how this piece pans out. How is the sales engine there? How is the sales velocity there? What are the price points we can get? And then, hopefully, if this gives us confidence, we can look around to a couple of more projects in Mumbai. But right now, we are only focused on this one in Mumbai. And in Goa, in contrast, Sonia, we had these 3 land parcels for, I think, for the last 15 years.
Okay, I think there's some issue with the audio and the video. Sorry, Mr. Tyagi, we'll come back to you. But we got that. We got your, expectations, at least from the Mumbai market, and you're hopeful of surpassing your full year sales guidance as well. By the way, the market has taken a turn for the worse. So the Nifty is now in the red. The real action, as we were telling you earlier in the morning chat as well, is in the Bank Nifty. So the Bank Nifty is almost, climbing towards that 50,000 mark. It is the big outperformer today, led largely by names like HDFC Bank. But other than that, the Nifty is very, very quiet. So, not too much happening over there. Sachidanand Uttekar, the AVP Technical Equity at Trade Bulls, is joining us now to talk about that. Sachidanand, thanks a lot for joining in. So this market has been uptrending. It's been hitting new highs, but now it's a big week, right? There is election week coming up, counting day, exit polls, etc. How are you, what are you advising traders to do in this week?
Good morning, Sonia. And clearly, I think if you look at the run-up towards this event, it has been substantial. In fact, Nifty has, reconfirmed that particular base at around 22,000, and from then, since then, we have seen this high top, high bottom sequence well intact in the market. For the last 12 trading sessions, Nifty has never closed below its previous day swing low. So that is a good, sequence to gauge the strength, underlying strength of this particular trend. So I think until unless we don't see the Nifty, slipping below or closing below that 22,800 mark from here on, I think the momentum on the higher side should continue. Yes, there are hurdles at around 23,000, but we don't see that particular level, disturbing the expiry move, and we may see Nifty, expiring somewhere close to around 23,000, 450, 430 kind of a zone. So clearly, I think the declines that we are seeing even during intraday should provide another opportunity to create long positions. So from a trading perspective, we are expecting that the market should scale higher towards that 23,450 kind of a mark during this particular week itself, and that's why we are recommending building long positions here. From an intraday perspective, I think the decline towards 22,900 should be considered healthy. For the day, we don't see the Nifty closing below that 22,940 kind of a mark on a closing basis, and we may see again a reversal here setting in. So I think this dips is a good opportunity.
All right, dips are a good opportunity. Markets, by the way, it's flattish, right? Sachinand, thanks for that. Okay, I think you have some stocks as well, right? Specific stock trades.
Liking TCS from here on. In fact, Nifty IT has been a good contributor last week. We have seen a good revival here. The Nifty IT index itself is trending confidently above its 200-day exponential moving average, which is placed somewhere close to around 33,800, and that's why we see that there could be some more run up on the upside. TCS, we have seen a good positive divergence on the stock. We have seen a good contraction here on the price scale, from which we may see an expansion towards 3940, 3960 kind of a zone. So that's why we are recommending building long positions here. One can keep a trading stop loss somewhere close to around 3846, and fresh deployments can be done in TCS.
Okay. All right. We'll leave it there, Sachinand. Good speaking with you, and we'll come back for more as the day goes by. But we're down about 15 points. Look at the advanced decline. I think that is the real story, with 1,500 stocks lower and about 800 stocks which are higher at this point in time. So in the broader market, I think there has been a bit more of the worsening we've been talking about. We'll take a break. Manisha will sort of put the spotlight on commodities once again. That's coming up in a bit. Stay with us.
Well, let's focus to the commodity markets. Manisha Gupta is joining in. Manisha, what's the one commodity that you're tracking today?
Well, I'm looking at the sugar prices, and globally we've seen some profit taking come into this one from the highs of 2024. The prices have been under pressure because there is increase in short positions coming in from traders and speculators, and they are taking money off onto this one. And they have been doing that for the last couple of months or so. I want to take you through the prices on how they have been. So we started this year in sense of raw sugar prices at around $20.9 per pound there. The high that we saw came also in the month of January at 24.5, and then a very steep profit taking and took the prices all the way to 18, and we're trading at 18.4. The markets do believe that 18 as of now is a rock solid support for the sugar prices, but because from here on you could be looking at the demand going forward on the higher side as well. I also want to take you through the USDA report for the 2024-25 year, where they are anticipating an record production and record consumption as well in the global markets there. The higher production clearly seems to be coming in from Brazil, from Thailand, China and Mexico. Many of these countries actually are not making as much ethanol as they are doing in sense of sugar because of the higher demand, and also because the crude prices are trading at a 3-month lows. Ethanol is not very profitable right now, so there's a lot of sugar that is being produced in the international markets there. So when you look at the production and the consumption numbers, it's a record number for this season at 186 million tons of production and 178.8 million tons of demand there. Now let's come to Indian markets, where you are looking at consumption hitting all-time highs in the previous year, and the anticipation is for this year as well. So when you look at the numbers for 2022-23 in sense of sugar demand in the country, it was at 27.85 million tons. Now last year we've done 29, which is a record highs, and the markets do believe it can be 29.5, even 30. I mean, that is something that many of the industry representatives seem to be talking about. There is very strong sugar demand into the country. You get them anyway in sense of processed foods and various off-shelf food there. But apart from that as well, it has to do with the summer demand season in sense of beverages and ice creams that really seems to have picked up. It also has been elections where too many people are out on the roads, and there is an increase in demand in that sense as well in sense of sugar there. When you look at the markets going forward, well, the anticipation is that we have seen a 5% increase in demand in these last couple of months itself as compared to previous year. Now, India is important in sense of numbers there, because global consumption, well, 15% of that is contributed by India. And when you look at production numbers also, 20% of that comes in from India. So all eyes here as we are looking at better production numbers, but our absence from the export markets is something that the rest of the world is also watching.
Okay, thanks a lot, Manisha, for that. Well, moving on, Motilal Oswal has unveiled a new 6-story tower in Bengaluru. My colleague Ritu Singh spoke to Ramdev Agarwal, the chairman of the Motilal Oswal Group, and asked him on what to expect from the markets on the back of the June 4th outcome and lots more. Listen in to a few excerpts of that conversation.
From domestic side, definitely you'll get to see the lot of excitement depending on what kind of mandate is there. I mean, the fun part is that all the people in political circle, I mean the party bigwigs, you know, they know the outcome because they are seeing the exit poll on a daily basis. 5 phases are done. They would have some kind of inkling from their own exit poll. Because exit poll is done the day on which the voting is done. So they have the result. But public, it can be done only on after the last. So my sense is the way they are talking about whatever large number, 300 plus, 340, 350, I think they might be, they almost can see what is going to be the outcome. So even the betting markets, which is much more independent and they don't listen to anybody, no nonsense, and you can put your bet. And that's talking about 310 BJP alone. I think if that kind of number comes, at least the event is behind. Now the continuity of the current regime and the first 100 days and new set of cabinet and new thought processes. Even the world is watching more than us. World is watching. What kind of, I mean, see, ultimately it's a large democracy and I mean, country, fastest growing large economy in the world, and if there is any disruption here, it could spoil the story. So, you know, suddenly the press becomes skeptical, the FIs become skeptical. I mean, to us it doesn't matter so much, but to the world it becomes, and it's one of the best stories around. So my sense is it's a very well watched, not only domestically but internationally election. I think it is going to make headlines in all the global newspapers.
Well, let's say there is political continuity. What would you watch out for as the big macro themes that will play out if the Modi government comes to power for the 3rd time?
See, first thing is I think it is going to be more of same. the direction they have set, I don't think they have set it for second term, and then there is a very different, of course it becomes bigger. See, what happens is that every 7 8 years economy size is double. Now double from where? Say 7 years back economy was $2 trillion. So they were getting say 12% of $2 trillion, which is about $250 billion of taxes. Today it is a $4 trillion. So in $4 trillion bigger economy, they get 12% of $4 trillion. So that makes it almost $500 billion of tax revenue, which is about say 40 lakhs converted into Indian rupees. Now in next 5, 7, 8 years, this 4 is going to go to 8. So government's own revenue will become $1 trillion. You know? So the game, I mean the additional resources in the hands of government will just go to balloon, and I'm taking this as a same tax rate to the GDP. But as the GDP rises, they also have a chance to increase the tax to GDP kind of thing. So my sense is we are looking at say in 2028-29, which will be their exit. 29 will be exit year. That year, they would have $1 trillion tax revenue.
So from a market's point of view, what would be the themes that would look attractive with this political continuity if it were to be?
So one is that, see, there are 50, 60 sectors in the economy. Now what happens is any given point of time, all of them are neither going down nor all of them are going up. So right now we have about 20, 25 sectors which are doing very well, and 30, 35 sectors not doing so well. You know, so the things will keep churning. Say like last year automobile was not doing well, but in last 3, 4 quarters automobile has picked up big time. You know, across even the affordable automobile like Hero MotoCorp and all TVS. They were not doing so well, but now they have also got momentum. So the trickle down of the wealth effect. See, one is that what the government is doing and what the consumers are doing. Third is what markets are doing. You know, this wealth effect. You know, this last year I believe we had a change of about 125 lakh crores of additional wealth in your and my pocket. That is about 30% of GDP. Of that, even 2-3% if people start spending on marriages, travel, consumption, whatever you say.
Consumption driven.
So you can see the consumption boom. You see the first thing what people want to buy, the moment they become rich, they want to buy better and bigger house. And you see the boom in housing. All the real estate companies, they were in dumps just 4 years back. Today, they don't have time to talk. Yesterday, I met one of the most prestigious real estate company in here, and he says, "Sir, I don't have any inventory." So sad, and the demand is so much, and I don't have any inventory. So that's the kind of thing. So the boom will keep moving from one sector to other, and the boom will be bigger for the ones which are doing very badly, because the delta change will be very large. Because markets are all about delta change.
Okay, well, interesting conversation with Ramdev Agarwal as sort of they enter Bangalore with their own sort of Motorola Oswal towers there. A lot of excitement around, you know, in domestic markets amongst domestic investors on around the election results, and of course, Ramdev they're betting on a continuity as far as politics is concerned. All right, let's talk about specific names. Markets flattened out. We're down about 5 points. But Divi's is something we want to sort of touch base upon once again. Ekta is here to do that. Ekta.
Thanks for that. Well, Divi's Labs is reacting to what is a good set of numbers. So the revenue is up around 18% on a year-on-year basis. Margins have come in at a multi-quarter high for Divi's at 31.7 versus 25% and versus estimates of around 27%. Profit also 538 odd crores. Street was anticipating around 465 odd crores. Now, in terms of commentary, it was positive because the key driver was the custom synthesis segment, which, according to the management, benefited from seasonality plus 2 commercial projects. They've maintained margins despite price falls in API due to backward integration plus higher volume share. They're estimating long-term double-digit growth to be aided by long-term supply agreement with one of the innovator customers that they have signed up with. Divi is mulling entering into the market for basic amino acids that are basically key starting materials for GLP-1. So not that much of a blockbuster entry into the GLP-1 opportunity. 2 molecules are going off patent, which would provide opportunities in FY25 and 7 molecules over the next 5 years. Capex 1,500 crores, cash of around 3,200 crores on books. Kotak retains its sell target price 3250. According to them, valuations stay rich. Goldman Sachs neutral, target price 4020. Jefferies hold, they've raised their target price to over 4,000 odd rupees. Elara sell, target price of 3017. Upswing quarter, but outlook unchanged according to them. Valuations, remember for Divi's, remains punchy at around 40 times plus for its FY26 PE.
Okay, thanks a lot, Ekta, for that. Let's slip into a quick break. On the other side, we will connect with Sanjay Kulshrestha, who's the Chairman and Managing Director at Hoodco, to discuss their Q4 performance. Do stay tuned in. Welcome back. As promised, we're going to talk about Hoodco. Now, the company has delivered a strong Q4. They reported very good disbursement growth. AUM growth was strong. To discuss more about this, Sanjay Kulshrestha, the Chairman and Managing Director at Hoodco, is joining in. Mr. Kulshrestha, good morning and thanks for joining us. You know, I want to talk about how your disbursal growth was so strong. What is the expectation in FY25? Is this a sustainable number that we are looking at?
Thank you and good morning. We had achieved the overall growth in the loan book to the extent of 15%. We had raised from 80,000 loan book to 92,000. And as a midterm target, we had taken that within 2 financial years, our loan book should become 1.5 lakh crores. As a part of this strategy, we had started growing up, and this year we had more than double the disbursement. And for this year, we had kept the target of 32,000 crores, and for next year, it will be around 40,000 crores. And the growth is very high, and because of the robust policies of the government and the ecosystem of the lending, I think it will be possible to grow at least at the rate of 20 to 25% of the CAGR. I will also like to add that the financials of the companies are so strong, which are very supportive to our borrowings also. That will give a really boost to the disbursements.
Okay, so can you give me the disbursement growth number? I'm looking for that. What is the disbursement growth that you hope to achieve? I mean, it's gone up 150% quarter on quarter, but year on year in FY25, what kind of growth are you looking at? And which is the segment of housing that is doing the best? Affordable, luxury, mid segment? Where are you seeing maximum demand?
See, we are into the affordable housing category. We are not funding to the private sector, and all our loans are extended to the state government and state government entities. since the Honorable Finance Minister in the last provisional budget has declared that there will be a PM Grameen, and there is a commitment from the government regarding extending the CLSS scheme also, so that will give a good opportunity for the company in the housing sector. Other than the housing sector, I see growth in the urban infrastructure, which consists of water, road, multilateral corridors, industrial corridors, new town planning, power, energy, waste disposals, so all the metro. So all these areas will provide us a good appetite to extend good loans, and which is backed by good programs and good support with the state government. So I am sure that whatever we are emphasizing, and since we had proved during last financial year that the growth can come, and I am very hopeful that we will be making the disbursement to more than 30,000 crores from this year's 18,000 crores. So I am very hopeful that by 2026 our loan will be something near to 1.5 lakh crores.
Okay, all right. Got that, sir. That's helpful. What about your yields that you enjoy? Because the concern is that maybe they're not as attractive as they could be, despite the robust growth in sort of business, interest income, etc. Interest income has only increased by about 1% quarter on quarter. Could you explain why are yields lower?
Yeah, actually, if you start from the nodal point that our asset quality is very strong, and we are extending our loans of around 97 or 98% to the state government and state government entities. So because of the good asset qualities, our yields are low, and the company commitment and the objective is to grow the social sector in the country, to support the government of India initiatives. At the same time, we keep on working on lowering our cost of funds. You may have seen during last financial year we had cut down our cost by around 26 basis points. It has came down from 7.46 to 7.1%. So our emphasis and target is given to my team to cut down the cost and to be in the range of around 1.6, 1.7% of the spread, and NIM to the tune of around 3.1 to 3.3%. So because this is sustainable growth, and we want that infrastructure in the country should be more sustainable, more viable, and no new NPA should come to the company.
Okay, 3.3 odd percent in that range. That's essentially what you're aiming for over a period of time, right? And of course, I mean, given the line of business that you're in, the focus is not exactly to sort of try to expand that as much as possible. It's a balance for you.
Yeah. Yeah, I think 3.3 we can achieve in the first half yearly of this financial year. So it will not be a big deal. As per our books, around 20,000 crores is given to the government of India, and we are getting some servicing charges for around 40 basis points. So if I take my loan book minus the EBR, the yields are much more higher. So I think spread and NIM is not a problem. And we are also looking at that there may be some softening of the rates in the second half of this financial year. And the statement is backed by, you can see the RBI dividend or the inflation controls, or the deficits are reducing. So a lot of financial stabilities are coming. And everything is indicating that rates may start softening. So additionally, we are doing a lot of measures internally and externally to reduce our cost of fund. We are diversifying our resources. Internally also, we are controlling how to deploy the HQLA or how to do the provisioning. At the same time, we are also working towards the resolution of the stress assets.
Right. Could you give us a sense of the stressed asset book? What is it at? What's the plan going forward?
Yeah. So I'm happy to inform that our net NPA now is only 0.36%. This is one of the best in the industry. We had keep on reducing our gross NPA, and now it stands at 2.7%. We had reduced it from 3.42%. So we keep on working on resolving all those assets, and I'm very hopeful that most of the assets will be resolving within 2 years of the time, because around 1,400 crores loan book is under this resolution of the NCLT. And I'm pretty sure that they are in the advanced stage, and these assets will be resolving during this financial year.
Other than this, there are so many cases in the DRT and DRAT, and which are taking so long. So we are working with them, and we are trying to align our OTS policy in line with the guidelines of the RBI. And very soon you will find that these issues will be resolved.
And that 1.5 lakh crore AUM is by, you said, FY27, right? So you're at about 92 right now, by FY27.
Yeah, it is true.
Got that.
True.
Got that. So thank you
And
very
we
much
think
for your...
that it's an organic growth that the company will be doing.
Got it, sir. Thank you very much for joining us. Appreciate you coming on here on CNBC-TV18. Good luck to you, your team, as you continue to execute very well. And of course, I mean, the market's done, its part in terms of bidding the share price up to new highs. Thank you very much once again. So that's the management of Foodco with outlook for business. The market's come back into the green. The Nifty is up about 25 points. It was down about 5-6 points, but largely flat. But there's a fair bit happening as far as specific stocks are concerned. Market breadth is still negative, not by a big margin or so. 1,400 stocks are down, and you have about 1,000 stocks which are higher. It's a wrap on this edition of Bazaar. Thanks very much for staying with us. But stay tuned. Chartbusters will pick up on all the action in just a bit from now.